Hey, what's up? This is Cody the Coin Raptor bringing you another fantastic video. And in today's video, we're going to go ahead and cover the ARK Invest Bitcoin monthly for the month of February. Now, I didn't do one for January, so this is the most recent one that I've done since I did the December Bitcoin monthly report. And I've gone through it, and there's some really important points here that ARK Invest has gone over. So I'm going to go ahead and break all that down for you guys, and I'm going to go ahead and give my overall thoughts on this Bitcoin monthly report. We're going to go ahead and get right into it. So ARK Invest usually puts these out every single month. They normally start here with the summary page. Okay, so the summary page here basically saying that Bitcoin's price has risen, in this case, to 61,000, and has had its best monthly performance since December of 2020. They also say at the end of February, Bitcoin's 200-day moving average is 36,000, and its on-chain mean was 35,000. Its short-term holder cost basis was 45,000. So those are all significantly off of the current price. And what's also very interesting here is the notion that Bitcoin is potentially becoming a safe haven asset. Okay, we're going to talk about that more in the later slides here, but becoming a safe haven asset akin to gold, for instance. Now, they also have here in the key takeaways that spot Bitcoin ETFs account for 3.9% of all Bitcoin outstanding. This is something I've been talking about quite a bit, and the fact that these spot ETFs have taken a significant number of the Bitcoin out of circulation, and they've custodied it themselves because of the demand that they're getting for these spot Bitcoin products. And then it also seems like Bitcoin is evolving into a hedge against the vagaries of monetary policy. They'll cover that in the last couple of slides. So if we go and look at the network activity, this is mostly the same, except for the fact that they've upgraded the miner revenue and active owners to bullish. Okay, so all these are bullish except for the time weighted turnover, which is bearish, or neutral, I should say. And this overall, I think, looks pretty good. Now, looking at the metrics data, now this is a little bit more interesting here. The percent supply and profit has been downgraded to neutral. The perpetual futures basis has been downgraded to bearish, and the expirational futures basis have been downgraded to bearish as well. I think this is not anything particularly to be worried about. It's just traders and trader momentum in February. Now we're going to get to the good stuff here. So, on a cyclical basis, Bitcoin's mean reversion ended February in neutral territory. All right, so what does that mean? Okay, so what it means is that when you take a look at these levels, 200-day moving average, the short-term holder cost basis, the price to on-chain mean, what they're saying here is that Bitcoin hasn't reached that level of exuberance that characterized prior cycle tops. Now, again, this is back in February. But according to the metrics they're looking at, it essentially means that Bitcoin has more room left to run. All right, it has definitely higher levels that it can obtain. You can actually see here in 2021, when we take a look at these other metrics here, they actually went up much, much higher, where we are like kind of more mid tier, or at least it was back when it was about 61,000 or so. But even now, it wouldn't even really be that farther off the top here. So what that means is that Bitcoin has more room left to run and before it hits a top. They also talk about the spot ETFs holding a significant share of Bitcoin supply. Now you can see here that it's been pretty steady ever since the approval of those Bitcoin spot ETFs from the beginning of February, the 1st of February, all the way to the 29th of February. We can see here that the number of assets under management for the ETFs, those increased, and then the Bitcoin price also increased. So you can see that was primarily one of the reasons why we saw such a huge increase in the Bitcoin price. Now, they actually went to the point of 3.9% of Bitcoin's total supply. All right, so that's pretty insane. I think that's going to wind up getting much higher than that in the future. But 3.9% of the Bitcoin supply, honestly, I think we haven't really seen anything yet. Now, and another important point is that they actually look at the assets under management as percent of total supply without grayscale. Okay, so they have the grayscale, and then they have the non-grayscale here. The non-grayscale is the purple, and then the all of them, including the grayscale, is actually green here. Next, They talk about the realized and the investor cap. Okay, so the realized cap is basically a cost basis of the Bitcoin market. All right. And then your investor cap is the cost basis of secondary markets. Okay, investors and exchanges, ex miners. And so far, they've seen that the realized cap, actually, the price has surpassed the realized cap. The investor cap, it is not has not actually moved higher than the actual investor cap just yet. Now it looks like the investor cap, from what I can see here on the chart, is fairly close to the previous all-time high, so 69,000 or so. That's kind of what they were looking at here for the investor cap. So we definitely, if you move above 61,000, which is where it is right now, then you definitely have a point where you're above the investor cap. Now, the reason why they talk about this is because if the investor cap were to make a new all-time high, it would validate the conviction of Bitcoin's holder base, right? So we already knew about this coming in. I've made a few videos that I've talked about the incredible conviction of Bitcoin's holder base, but this is just another way to validate that. Next, they talk about the falling volatility. All right. So the volatility of Bitcoin has been just, I guess, has been falling over the past year or so. You can actually see here the realized volatility in black, and then the purple, which is the realized volatility for 3 months. You can kind of see it just kind of continue to move down and move down and move down. And then you get to a point where in 2024, it actually all of a sudden starts moving up again here. So that gives us an idea that Bitcoin is honestly becoming just a more volatile asset. Okay. So this is basically they're saying here that the cycle to cycle Bitcoin's volatility is declining prior to that. And the incremental demand and momentum are expanding the market today. So we're seeing that market momentum push volatility much higher. And in fact, this realized volatility as a percentage is actually higher than what they've seen in the previous bull runs, like 2021 and even here in 2012. It's actually larger than that. It came up here to close to like 500 apparently. So this is bullish in ARK's view. It is looking very similar like we've seen with the previous bull markets. Next, they talk about the active supply flows. All right, so the active supply, the number of coins that have moved in Bitcoin network since the inception. All right, we've seen a previously to this during 2023 mostly, and some of 2022. This was actually negative for a while here. Now we're actually starting to see, as 2024 came around, we've actually started to see a positive movement. So what that means is that the active supply typically grows with more Bitcoin economic circulation. So as the Bitcoin price moves up, you tend to see more of these supply in circulation as these holders sell, as the miners sell, and that's one of the reasons why we've seen the active supply increase. Okay, next they talk about if Bitcoin's safe haven appeal is increasing or not. And they first start with the current monetary policy. So they like to draw a difference here between monetary policy as driven by human decision making, which means it can be kind of arbitrary. They can kind of make up the rules and they can just decide however they want to go ahead and do this. And they compare that to Bitcoin, which is a rules-based system, okay? And they say it's mathematically metered to top out at 21 million coins, which we all know is the truth here for this. So comparing the two, it would seem as though the monetary policy essentially means that they're going to continue debasing the currency in the U.S. So the dollar is going to continue to be debased, whereas Bitcoin is rules-based, okay, and it will wind up being a better store of value in the long term. So they also compare the metals to gold ratio versus the 10-year treasury. And the reason why they want to talk about this is because the metal to gold ratio here in black tends to follow the 10-year treasury yield. We've seen it kind of move in lockstep for the most part for like the past 20 years or so. Now, you'll notice here in about 2021, there was a significant divergence, and especially in 2022, the 10-year treasury yield spiked up rapidly as the Fed raised rates, and then the metals to gold ratio decreased significantly. And so what they're saying here is that they're expecting these two to realign again, and that would would basically involve the 10-year Treasury yield coming down. All right, so the yield right now currently above 4% would actually go down, and it would go more towards the metals to gold ratio. Okay. But they're also saying that it's a possibility that one of the reasons could be the importance of technology, which is deflationary, not captured effectively in traditional economic statistics. All right. So, then I would also say that when the Treasury yield actually comes down, you're going to have less people that are looking to buy Treasury bonds. And if that's the case, they're going to put their money elsewhere. They could, in fact, put it in Bitcoin for long-term safe haven, or they could go and buy traditional equities. All right, so is Bitcoin a safe haven asset? All right. The whole idea here is that Bitcoin, unlike the traditional monetary system with the US dollar, it could wind up being a more safe haven asset akin to gold. Okay. And they're specifically drawing up the reason why that could be the case. People are looking for alternate assets during times of crises. And especially they point out here in the bank crisis of 2023, in which you had multiple banks fail. It actually wound up rising significantly during that time last year when they had the banks fail during last February. And it's entirely possible that we saw, as a result, people looking to put their money in Bitcoin instead of keeping it in dollars. All right, so that kind of concludes this Bitcoin monthly report, and I want to go ahead and just give my thoughts on it. Now, you guys will notice if you've actually been paying attention to these videos, if you watched my videos previously when we talked about ARK's monthly Bitcoin monthly slideshow here, they usually talk about the economic environment, and usually they're very bearish about the economic environment. This time they didn't do that, and I think that's really interesting, because now instead of talking about the economic environment, saying, hey, there's a recession coming, which they've done in previous Bitcoin monthlies, now they're starting to say, okay, is Bitcoin a safe haven? All right, so, and if Bitcoin is a safe haven, that will be a prime target for people to wind up putting their money into Bitcoin during times of crises, right? We talked about with the bank collapses in 2023, and now ARK's kind of they're starting to put that into perspective. And if we are going to see a horrible recession or a deep depression, Bitcoin could wind up being that safe haven asset that people want to get into because they know that the U.S. dollar is going to get debased and it's going to continue to lose its value. All right, but let me know what you guys think about this. Leave your comments below, and I will catch you guys in the next video.